Okay, guys, welcome to lecture 2 of scalping stroke intraday trading. You already watched the induction lecture, then you also watched lecture 1, which was price action. We introduced you guys to the price action. We had introduced you to the basics, how the price works, the nature of the price, and then I had given you exercises, and I can say I have received literally 65% students assignments that I have checked. I see a lot of them haven't sent the assignments yet. So if you still haven't sent the assignments, make sure you will be sending me the assignments. If you think that you can understand the scalping by just watching my training course and become a successful scalper, but that's not going to happen, I can tell you this. You need paper trading, you need demo training, and then eventually you will become a scalper. So please confirm if everybody understand, guys. You can never become a successful trader by watching these webinars. Forget it. You need to practice. First of all, paper trading. What paper trading does is it is an execution of your knowledge on the charts without emotions, greed, and fear kicking in. Paper trading, I used to do a lot of paper trading in the banks, and we also do a lot of paper trading in hedge funds. So that's what makes you a successful trader. Then you move on to the demo training. In demo training, paper trading is an execution of your knowledge on the charts. Adding in on demo training is psychological factors, fear, greed. So it's another stage ahead, a stage higher than the paper trading. And eventually then you make your transition from paper trading, demo trading to live trading. So if you follow my instructions, you will have a smooth transition. So please make sure you're sending me your assignments. So please confirm if everybody understands. Good. Lecture 1. We learn what is price action. We also learn the basic concept of support and resistance and their relationship with the price. We also learn how to trap the price, how to identify channels. We also learn the concepts of break and retest, and we also learn the concept of counter trend lines and their effectiveness. So make sure you have a good understanding on them, not just understanding. You've been practicing them on the charts. If you're not practicing, trust me, when you're trading the live markets, market would not give you enough time to understand the discrepancies it creates with the volatility, and you will have eventually a lot of losses, like we had seen the losses by a lot of students in last few weeks when there was high volatility because of the movement in the gold prices and in the movement in the GBP prices. So please make sure you are doing your paper trading and completing your assignments. So please confirm again, everybody understand. I can begin this webinar. Okay, now let's begin. This is lecture 2, guys. I'm going to teach you the institutional levels. What are the intraday institutional levels? We divide them. I have divided them in two classes. The first is the primary levels, and the second is the secondary levels. So primary levels and secondary levels, I'm going to show you precisely how you will be marking your primary levels on the charts. You will be marking your primary levels on the charts, and how you will be using your secondary levels with the primary levels and their relationship. You will also learn today how to mark your charts, guys. By the way, you're going to also learn how to mark your charts for scalping. So the setup, the templates that I'm going to set out for you are the templates that you will be using to trade intraday trading or scalping. Obviously, you can add any other indicators to it, but I am giving you the recommended standard templates that I have been using for myself in previous years, and I have been extremely successful. So please confirm if everybody understand. So today's lecture is all about institutional levels, and that is precisely it. MT4, Stefan, no, you need a trading view, at least. That's what I suggest, or FXCM, a private platform to set up these charts easily. MT4 will have slight non-clarity, and hence it's strongly suggested, guys, use MT4. I personally use TradingView, and my apologies, use TradingView. I personally use the TradingView, but I execute my trades from the phone, guys. So that's how I trade. I've got a master account which I trade, and all the other accounts are connected with it. So please confirm if everybody understands. Okay, now let's begin. Guys, let's begin. And the first thing first. Intraday traders sitting in the banks are also trading with support and resistance levels. Now remember this, they're also trading with support and resistance levels, institutional support and resistance levels. They're buying from those levels, they are selling from those levels, they are playing those intraday levels, institutional intraday levels. Intraday levels are the levels they selected when the day begins, and they discard them, they end their days and by using those levels, and every morning they select another new intraday level. So the intraday institutional levels are refreshed every day based on the average daily range of the instruments. Guys, try to understand what I said. Intraday institutional levels are refreshed every day based on the average daily range of the instrument, based on the volatility in the market, based on the next day events in the markets. There are many factors. So we will be using those institutional intraday levels to trade. That these levels will be classified as our primary levels, and I want you to remember them by the word primary levels, because you will understand there is a secondary levels of significant importance as well. But when it comes to the relationship between the primary and the secondary, you will always give preference to the primary levels and then to the secondary level. Please confirm if you guys understand, all of you. Okay. Primary levels, first of all. The key is, when I say intraday primary levels, it's an intraday institutional trader using these levels. And guys, in the desk floor of the banks, we used to use these levels. That is where I was trained, by using these levels in the banks. One of my extremely close friend, he is being detained in Bahrain because he had caused a significant loss to the Bank of Bahrain, and apparently they put him under detention. He has to make the money back for the bank before they release him. I think he's made more than 90% already. He is one of the best scalper that I ever met, and he is one of the scalpers who has really taught me how to scalp after my initial training at the bank where I work. So guys, I had seen in 16 hedge funds that they use these same levels to trade. It's not just because I am saying it's an institutional intraday level. There is a rationality and reasoning behind it. And it's based on my experience, not only, but also you will see their effectiveness whilst trading. Now, I have seen them in 16 hedge funds. 7 of them are providing consultancy, by the way. Consultancy means I give them the trading calls, they trade based on my analysis, and I get the commission out of it. Also, I have personally seen them on the trading desk of six or seven banks that I have visited for giving lectures or trading on the trading desk or analytic reasons. So these levels has been used on the trading desk of banks, institutions, the hedge funds. So therefore, we will also be using these levels, and these are only effective, again say, only effective for intraday trading, not for swing trading, not for, my apologies, not for setup trading. It's only effective on intraday trading. So please confirm if you guys understand this. It's called pivotal support and resistance levels. You have seen in many indicators its name as pivots. You guys know about pivots, right? But I'm going to show you, try understand the effectiveness. Now these are called pivots, pivotal support and resistance levels, guys. That is what you should be using to do intraday trading. They are not effective for trading, setup trading, swing trading, but I'm going to teach you an effective use of them and then how to use them for intraday trading, stroke scalping. So please confirm if everybody understand them. That is your primary intraday levels. Okay, what is your secondary? Let's consider the primary intraday levels on the charts, guys. So please confirm if everybody understand what I said. Again, remember, guys, you can use them for intraday entries and exits. You can use them for scalping, intraday scalping, but you cannot use them effectively for swing and setup trading. Try understand, an intraday trader sitting in the bench use these levels to take an entry. The market will always react from these levels. 85% market react from these levels. Again, I'll say 85%. I'm going to prove this right in front of you. So please focus with me on this. So say yes, all of you. Okay, guys, I'm on H1. So stay on H1. It's slightly zoomed out. And how to put this pivotal support and resistance levels or pivots here on your charts, there is an indicator, inbuilt indicator on trading view. It's effective. Its accuracy is nearly 72%. I personally use a customized indicator that was built by the bank I work that has slight edge. But again, guys, if using this indicator on the trading view is the best that I found without any cost, and it is still extremely effective, and I see no reason why you shouldn't be able to trade successfully with it. Everybody understand? Say yes. So go on indicators, write pivots. You will see many options: pivot points, high, low, pivot point, standard, extensions, reversals, many options there. You will select pivot point standard. Everybody understand what I said? You will select pivot point standard, guys. It will give you something like this. Everybody see this, right? Okay, great, guys. Let's go back to the properties. Let's go back to the properties format. Guys, I'm gonna customize properties on them, slightly customized properties. I'm gonna customize them. I've selected black color. And also, guys, pivot time frame. Can you see this pivot time frame? Extremely important. There are different time frames: auto, daily, weekly, monthly, yearly. You will be selecting, first of all, daily. Everybody understand, guys, it's an intraday trading. We're going to do an intraday trading. We are going to trade with an intraday institutional trader, which normally use pivotal support and resistance, slightly different than these ones, but they are the nearest ones available in the market. So everybody understand? Say yes. Select daily here. I'm going to delete the historical pivots here. You can add them, you can delete them, you can add them for practicing purposes, but for now, for basic understanding, I'm going to delete them. So please confirm if everybody understand, guys, all of you. Can you see this in front of you? Okay, let's try to understand what these pivots are. Guys, you have a pivot, which is a center of gravity, the central point. Let's put it this way: pivot as a central point, and I want you to treat them just like support and resistance levels. Just like support and resistance levels. If the price is above a pivotal level, it's likely to go to the next pivotal level. If the price is below a pivotal level, it's likely to go to the pivotal level underneath. So everybody understand what I've said? Okay, guys, you have the pivots. This is your pivot. If the price is above this level, basics, I'm going to tell you the basics first. basic principles, but the principle is use them as basic support and resistance levels with few exceptions, which I'm going to discuss in a second. So guys, if the price is above this, the price will go to R1. You guys understand this? And if the price is holding above R1, it's likely to go to R2, guys. You understand this? If the price is below R1, it's going back to the pivots, guys. You guys understand what I'm saying? If the price rejects below pivot, it's going to S1, and it's going rejected below S1, it's going back to S2, guys. Please confirm if everybody understand what I'm saying. Say yes, all of you. Basic principle of support and resistance: price above, break and retest, we will be buying. If the price below, break and retest, we will be selling to the next pivotal level, guys. First of all, guys, try and understand the space between each pivotal level is generated by different factors. The significant ones you need to understand is the average daily range of that instrument, also the volatility factors of that instrument. For instance, if there is a news event the following day, you will see the pivots will have more gaps in between them. That's how they have been programmed based on institutional scalpers and or intraday traders. You guys understand this? You know, you don't need to get into this much, but you will see sometimes the pivots have more space between them. The pivotal levels have less space between them. These are based on the factors and calculation made on factors. The most significant ones were the average daily range and the volatility factors the following day. Everybody understand them? Everybody understand? Say yes, guys. Now, second point I'm trying to make: when the price is pivot resistance 1 and resistance 3, and the price is between S1 and S3, guys, it's called overstretched. The price, intraday price, has been overstretched. Okay, guys, try and understand this. When the price is between S3 and S4, if there was a sell-off and the price has gone to S1 and S3, you will likely to see a reversal, guys, back towards the pivot. And when the price is between R1 and R4, R3 and R4, guys, let's say the price start rising from pivot, went to R3 and R4 levels, you are pretty likely to see the reversal from these areas, because that is where the price has been overstretched and it needs to recover and reposition itself for the following day. You guys understand? Say yes, all of you. They changes every day. When the daily candle closes, guys, you will see the pivots refreshed, the daily pivots refreshed at end of every day when the daily candle closes. So remember, guys, I will discuss this in the later lectures. You will not be holding any trade. The whole purpose as an intraday trader is you open and close your trades within a day by using that specific and particular day's pivots. You understand, guys? So please confirm if everybody understands so far what I've said. Overstretched. So if I'm trading, I'm pretty likely to look for reversals opportunities here, guys. You understand this? These areas. So please confirm if everybody understands so far what I've been saying. These are primary analysis. Now the key is institutional intraday traders always trigger the trade from the pivotal level. This is the key to understand. An institutional intraday trader will always trigger the trade from the pivotal levels, guys. What I've said, This is the first thing. Institutional intraday trader will always trigger the trade from the pivotal levels, guys. You understand this? Everybody understand this? This is the first thing. I say it's more than 80%. So if you want to trade with an institutional trader more than 80%, you always need to be opening up your trades from the pivotal levels. If you are opening up your trades from the pivotal levels, the advantage is this. I'm going to tell you guys. The price continues and reverses from the pivotal levels, guys. The price reacts from the pivotal levels. So if your entries are from the pivotal level and it's on the right direction, then your drawdown will literally be 7 to 15 pips. You understand what I'm trying to say? At some instance, they will nearly be 3 pips, 4 pips, or 5 pips, guys. You understand what I said? All of you guys understand what I said? So the key is that you will be opening up your trades from the pivotal level, because market, the price reacts from these levels. The price reverses from these levels. If institutional trader wants to reverse the trade, go to the downside, he will bring the price first of all to the pivotal level and then start injecting the money, so the price start reacting to the downside. You will see the price continuing from the pivotal levels first. And therefore, if you enter from the pivotal level and you're in the right direction of the trade, of the price, your drawdowns will likely to be extremely low. You understand, guys, what I've said? Extremely low, guys, extremely low. That's what I have to say, extremely low. Okay, everybody understands so far what I've been saying, guys? Guys, I'm not giving you a basic lecture on pivots here. I have given them before. I'm teaching you an intraday trading here. There's more to come. I will precisely show you how you're going to be trading using these levels. Today is a webinar on the primary levels and try to understand their effectiveness and their use and their relationship with stroke intraday trading. Understand? Okay, guys, just give me a second. That's fine, no worries. Guys, there are pivotal indicators on MT4. I strongly suggest not to use them because they are not accurate, first of all. And then again, guys, they'll make your charts extremely messy. When you're trading, it's not about just having these levels and you can trade. You need to have the clarity on the charts. You need to have the clean, neat, and precise charts so that you can focus. So my strong advice is use TradingView, or you can also use FXCM in personal platform, guys. Everybody understand? Say yes, all of you. Okay, guys, these are your primary levels. Primary, you will always try to trigger the trade from the pivotal levels, because remember, during the day, that is what an institutional trader does, guys, during the day. Okay, guys, you understand? During each day, institutional intraday trader play the pivotal levels and moves the market between them, and that's all he does. So as a retail trader, you also need to do is to play these levels with the institutional trader. You guys understand? It's pretty simple. Again, we are trying to focus and following an institutional intraday trader. You understand, guys? It's pretty simple. Everybody understand? Say yes, all of you. These are your primary levels. Okay, guys, well, let's consider the effectiveness of these pivotal levels. I'm going to show you guys and a little bit more details. This is where the day begins. Can you see this? From where the level begins, that is where your day begins. You understand, guys? Everybody understand? Say yes. This is where the day begins. This is where the market close its daily candlestick, a new pivotal levels forms on the charts or on your indicators, guys. But that is normally at 10 GMT United Kingdom time, by the way. But that's where your day begins, and that is where your day ends. You understand, guys? You guys understand? So this is the day. This is your one day, 24 hours, 3 sessions. This is your Asian session normally. That's your London session. And this is your New York session, guys. You understand? Everybody understand, guys? This is the formation of your day, and then when the daily candle closes at 10 p.m. United Kingdom, a new pivot forms. Again, Asian session, London session, New York session. We will be using a method where I will be talking about significant timings, reversal timings, the timings where you will be trading, things like this. But today, try to understand the primary levels, i.e. the pivots, guys. Everybody understand? Say yes, all of you. Guys, when you will be trading, scalping, stroke intraday trading, you will not be maneuvering within the time frames. So that's not going to happen, because if you're moving within the time frames, remember what I said, the pivots are not effective for setup tradings or position trading, high time frame trading, first of all. And secondly, guys, in scalping, you will be trading what you will see in front of you on just single time frame. So it's easier, but it's difficult at the same time. You will be taking 5 losses, 6 losses. So you need to be psychologically strong enough to know, yes, you will be using the same method and you will make the money back. It's all about the psychological side, which makes you a better scalper or stroke intraday trader, which I will be discussing in my last lecture. So guys, please confirm if you understand so far. The pivots when begins, Asian session, London session, New York session, that's how they are formed. You understand, guys? Okay, good. When the market normally opens, the price is never on any pivotal level normally. When the market opens, normally, the price is never at the pivotal level. You will always see the price in between the pivotal levels, between the pivot or S1 or between R1 and pivot, guys. You understand this? The first thing price does, remember, this is what's very important. The first thing price does, institutional, the price in that is Asian session, the price will go to the first pivotal level, either to, guys, try to understand, either to the pivots or either to S1, guys. You understand this? Everybody understand this? Please confirm me if you guys understand. This is how the price opens, remember. So guys, if you try to take a trade here, I call it a blind trade. If you try to take the first trade when the price hasn't touched any of the pivotal levels, it has just opened in between the pivotal level, you can take your first trade. You can take your first trade knowing that the price will go either to one or the other pivotal level. It's not a gambling, it's called a blind trade. I call it a blind trade. It's slightly risky. And why it's risky? Because your trade is not based on primary levels, but it will be based on your secondary levels, of which I'm going to discuss in a second, guys. You guys understand? Because this trade is not based on the primary levels, guys. The reason is the price is not on any pivotal level. You understand? And if you're entering the trade, this is an Asian session, begins an Asian session, beginning of the Asian session. You can always take a trade to either of the pivotal levels, guys. But I call it a blind trade because it's not from the primary levels and it's from the secondary levels, which I'm going to discuss in a second. So please confirm, guys, you understand. Remember, it's slightly riskier. You guys, you can take this trade. It's all, you need to understand what sort of trade you're getting into, how risky this trade might be, things like this. I'm not suggesting not to take a trade. You can take a trade, but try and understand the kind of trade you're entering in. Make sense? Everybody understand what I've said? This is the first trade, guys. Then market will react from these levels. Either let's say the price holds at S1, you will see the price holds at S1, and then might be the price went all the way to the upside to pivot. So guys, this is your first pivotal trade from primary levels. You guys understand this? Everybody understand this, what I've said? I'm giving you an example. Try and understand, guys, how the day works. If the price rejects here, let's say if the price holds above, rejects here, let's say rejects here, she is likely to go to sell trade. So it's going to be a sell trade. If the price rejects here, she's likely go to back to S1. So it's your sell trade again, guys. Remember, an institutional trader use pivotal levels to trade, guys. You understand? And now see it again, guys. If the price holds here again at S1, it is likely, I say the likely because sometimes market doesn't have the volatility inside. You understand, guys? It doesn't have the volatility, but it's most likely to go back to pivot. Guys, you understand this? And it did went back to pivots. Can you see this? Guys, you will see the price reacting. You will see, I'll say it again, you will see the price reacting from pivotal levels 85% during the day. How many percent? 85%, unless the market is extremely manipulated. Even if there is less volatility in the market, no matter how low the volatility is, you will see still price going from one pivotal level to another pivotal level, guys. You understand? Say yes, all of you, please. So you know what's the blind trade is, right? When I talk about the blind trade, that is where the blind trade Asian session, that's what the blind trade is. Okay, guys, we not just trade based on pivotal levels, by the way. There are many other factors, but today try understand the effectiveness of the pivotal levels and their relationship with the price stroke intraday trader. You understand this? All of you understand? Say yes. Okay, good. Guys, I'm going to show you here. See this, the price, the day opens here. Can you see this? The day opens here. This is where the day opens. The price went below pivot. Guys, just see the price is moving between pivotal levels. That's it. Just see this. The price was below pivot. The price came down. The price went up, fails, and went down all the way to this pivotal level, guys. Can you see this? Everybody see this? So price moves from pivot to S1 here, and then price hold at S1 and went back up again at what level, guys? The pivot again. Can you see this? The preciseness. Everybody understand, guys? Everybody understand, guys? Yes? Okay, let's consider another example. I'm considering an examples of Friday last week. Remember, guys, that's what happened on Friday last week, right? Let's consider the examples. The price opens here. The price opens here, fails to hold above the pivot, went down, came back up again, right? And then price did what, guys? Just see this. Because price was holding at pivot. Every time it's holding at pivot, it was trying to go to R1, guys. Can you see this? There was less volatility on last Friday, but you still see the price was almost there on these pivotal levels, guys. Can you see holding above P, going to R1, guys? That is what institutional trader is trading in their banks. You understand, guys? Everybody understand? Let's consider another example. Stephen, you already started talking money. It's not that easy, by the way. Guys, I use 60% of this method whilst trading, but I trade mostly based on pure price action and naked charts. That is why my scalping is, again, if I'm scalping and you see my entries different than yours, do not try to question and try focus on the method that I'm teaching. I do not trade based on just pivots. Okay, the market opens here, went up, low volatility, weaknesses, went down, went up again, fails. Now see this, guys. The failure is at a pivotal level. See how precisely the price went back to the S1. Can you see this? And when the price rises from S1, regardless there was low volatility, precisely went to the pivotal level. Can you see this? Intraday trader moving the market between the pivotal levels, guys. You understand? Say yes, all of you. Let's consider another example. I'm trying to make my point here, guys. I don't need any support and resistance. All I need is this. This is GJ last Friday, okay? Last Friday. This is your blind trade. Price opens, went to the first pivotal level, as I said. Either the price will go to R1 or P pivot. The price rejected, went to the first pivotal level. Can you see this, guys? Asian session, yes? Yes. Then price rises from the Asian session, reacted in the London session, rises, failed, holds above the pivot, went up to R1, it rejected, it doesn't have enough buyers in it, it fails, it rejected below the pivotal level, precisely it go back and hit the S1. Can you see this, guys? And price reacted from S1, precisely went back to hit the pivotal level, guys, again. Can you see this, guys? This is New York session. Everybody understand what I said? Can you not see the effectiveness of these support and resistance levels? Can you not see how the price is every day moving between these levels? What is the reason? Can you give me an answer? The reason is institutional scalper is trading these levels. You understand, guys? I don't have to tell you that banks are using this or hedge funds are using this, or I have seen using them. I can prove my point. I can prove my point by just telling you what's going on the charts. Guys, I will discuss the timings later, but London open and New York sessions are the timings of your scalping when there is volatility. You need volatility to trade intraday trading. You understand, guys? Okay, let's consider another example, guys. Market opens, went above the pivot, went up, fails to go back to R1, but guys, try and see. The market did try to push up, try to focus on R1. It fails. It substantially fails. But if it fails, the next station is back to pivot, reject at pivot, back to S1. Can you not see this? How effectively the price has been moving within one pivotal level to another and another pivotal level to another. Guys, you understand? Say yes, all of you. I'm giving you a lot of examples here to give you the confidence, in these methods, to give you the confidence. You can respond back to anybody who criticized my suggestion that institutional intraday traders has been trading. Guys, I can tell you this, a lot of teachers and mentors are trading successfully, but I know personally that they have not been trading with the banks. I have been employed by the bank for nearly 6 years now. I've been providing consultancy for nearly 3.5 or 4 years. And I've been extremely successful. So what I am saying is based on facts. I do not need to formalize facts here to attract you guys. You understand? All of you understand? Say yes. Now, I'm going to give you another effective argument, example in support of my argument, guys. The price moves intraday basis on pivotal levels. Remember when the news came out of GBP on last Wednesday, when the Prime Minister Theresa May gave a speech in which she announced the snap elections in United Kingdom. You guys remember this, right? The GBP fell before the news and rises after the news nearly 334 or 54 pips. Yes? Yes. Now, an institutional intraday trader trading those events have just traded the pivotal levels and had successfully made the money. And had you been following an institutional intraday trader, the day you will also be making the money without knowing there is a news, without knowing there is event, without following what's going on higher time frames, guys. I'm going to show you guys. I did show you guys based on the rules of price action stroke long-term trading in one of my webinars. The reversal took place from one of the support levels, if you remember, in one of the webinars I share on Facebook. Today I'm going to show you an institutional scalper or intraday trader where he bought and where the price start rising on that particular day. Let's consider. You guys remember this, right? Remember that day. Everybody remembers? Everybody remembers, right? Well, let's consider them. This is where the event took place, right, guys? That was the event. Remember, guys, yes? Guys, the price fell first. I'm going to show you. The price fell first. Can you see this? I'm going to show you without pivots first. Announcement, price fell before her announcement. After the announcement, market reaction. After the event, that is how the market reacted. The market rises nearly 335-40 pips. I'm just showing you guys an example on 15 minutes right now, James. The market rises 350, nearly 50 pips, guys, and a lot of people have lost their accounts. You understand, guys? Everybody understand in front of us, right? Let's consider the pivots now. Yes? Yes, guys, everybody understand. Let's consider if these reactions from are from any pivotal levels. Let's consider if you're an intraday trader. What an intraday institutional trader does. Let's consider. Go back to the format, guys. I'm using historical pivots levels so I can see the pivots in previous days, and I want you to use these to practice on your charts, paper trading, at which I will address you at a later stage, guys. So everybody can see this, what's in front of us, right? Right, guys? This is the day. The day begins. I'm going to show you the day. I'm going to show you the day of news. The day begins above the pivot, right? The day begins above the pivot. At pivot, the price was at pivot. The price rises and went to R1. Can you see this, guys? That is before the news, yes? Everybody can see this, right? Just see this, guys, before the news. The market rejected at R1. Precisely, market went on to S1. Can you see this, guys? The market rejected on R1, guys. Market precisely went to S1. Market finds support at S1. That is after the news event. And the price starts rising. Can you see the reaction from the pivotal level, guys? Can you see this? Can you see the before news reaction from the pivotal level, guys? Can you see this? And then the price starts rising. Can you see this again? The price did react for some time on another pivotal level, guys. Can you see this? The price wasn't reacting in between. The price reacted again on the pivotal level, decided to go further up, and up again, guys. Can you see this? And that day, the market moved extraordinarily, not its daily range. Hence, the price went all the way above the pivot extreme levels, which was R1, guys. You understand this? So can you see the market reacting from the pivotal levels even on the day when it was manipulation, it was an event, it was extreme volatility? You understand, guys? The question is why? The question is why? It's pretty simple. Institutional intraday trader were using these levels, and he was instructed by the bank management to use these levels to start buying or start selling. He was instructed to sell before the event, to buy from S1 levels. That's what he precisely did, and hence you see the market reacted. You understand, guys? Guys, I hope I have made my point, right? Okay, Amani, do you understand this? Okay, let's move on to another example now. GJ also rise nearly 400 pips that day. It might be the case that GJ might not even reacted from these levels. I might be wrong in my argument, right? Let's consider that. That is GJ, guys, yes? Before the news, the market rejected from SR1, and after the news, the market reacted from pivot again, guys, yes? You can say this reaction was nearly between S1 and pivot, but the price holds above P1. We will be buying stop loss below the pivotal level, guys, and see the reaction. Just see the reaction again at a pivotal level, guys, yes? See the reaction again at the pivotal level, yes? And see the reaction again at the pivotal level, yes? So guys, if I'm saying this, it's based on not just my experience, it's my knowledge and the education that I've had from banks and institutions. Again, guys, this is 65% of the way I trade scalping, but I'm giving you an extreme simplistic form method to trade intraday, follow institutional intraday trader. If you start following an institutional intraday trader, it will help you to become a better scalper, a better intraday trader. That's all I wanted, and that is the purpose of our training. Again, guys, we don't just trade by the pivotal levels or is based on the levels, institutional intraday level. There's more to it, but I will be addressing those concepts in a later lectures. Yes. Okay, guys, great. So everybody understand, guys? Yes. Guys, let's have a small chat on secondary institutional levels. These are the primary institutional, intraday institutional levels. Let's have a chat on secondary intraday institutional levels. Those levels are your manual support and resistance levels. You understand, guys? Those levels are your manual support and resistance levels. Let me give you an example. The channels support and resistance is your institutional secondary support and resistance levels, guys, levels. So these are secondary levels. You guys understand, guys? Understand? So this resistance is secondary level, this support is secondary level. You understand, guys? Yes? I'm going to give you an example in a second why I say secondary and why I say primary. If you're taking a trade, intraday trade based on the secondary levels, guys, it is slightly riskier. Always remember, you understand this? The best trade is from the pivotal levels, guys. So let's say you have a pivot here. Guys, give me a second. Okay, guys, imagine you have a pivotal level here. That's your pivot. The price opens here, and that's your second pivot, guys. This is your S1, yes? Okay, now the price opens here in an Asian session. Now remember what I said, the price has to go to either of the pivotal level or pivot or S1, yes? Yes? Now guys, you have your channels marked up. You have trapped the price using your secondary levels. Secondary levels, yes? And guys, let's say the price breaches your channel resistance, retest. Based on the rules of price action, if the price holds above the resistance levels, break and retest, and buyers kicks in, the price is likely to go up. Yes, that's what we learned in lecture 1. Yes. So the price is likely to go first to the pivotal level, right? So guys, you can take a trade here. You can take a trade here, but this trade will be from secondary levels. You understand this? Guys, you understand? So yes, I'm suggesting you can also take trades from these levels. You don't have to just take trades from the pivotal levels, but remember those trades will be from the secondary levels, and those trades will not be extremely trustworthy. You understand, guys? But they are B grade, B class, B trades. You understand? Everybody understand what I mean by the secondary levels when I'm suggesting the secondary levels. Hence, I distinguish between primary, the pivotal levels, or the secondary levels. So if I say you took a trade from what levels, you say secondary levels, meaning you're not trading from the pivotal levels then. Yes? You guys understand, guys? The problem with this trade is that risk and reward is not good. As an institutional intraday traders, mindset, it's not an ideal trade. Let me give you an example. Because institutional traders' journey is from one pivotal level to another pivotal level. Yes, journey is from this pivotal level, let's say, to this pivotal level. These are the stations for institutional intraday trader. Yes, so this journey based on institutional intraday trading levels is right in the center, 50%, right? So the price can go either to S1 or to P. Remember, hence, it's not an ideal trade. It's not a class A trade. You can still take this trade based on secondary levels, manual support and resistance levels that I have taught you in the price section in the first lecture, but the quality will not be as good as the pivotal levels, guys. You understand? JD, I'm not loading today. It will be uploaded tomorrow on the website. Guys, I'm extremely busy today. So guys, you understand what I mean by the secondary institutional levels and the primary institutional levels. I classify this primary intraday institutional levels and secondary levels. I won't classify as institutional levels, by the way. Everybody understand? You will be learning the relationship, how to take the trades using both of these levels together in lecture 4 and 5, which are practical sessions on entries and exits, and I'll give you an assignment to complete. But for now, this is the lecture in which we learn the institutional support and resistance intraday levels. So please confirm if everybody understand them. Please confirm if you have the confidence in these levels. I have tried to prove my point that they are institutional levels, intraday institutional levels, not just teaches you today that these are the levels. You understand this, guys? Say yes. Okay, great. Guys, I want you to go back after this lecture, try them on the charts and see how many times the price reversed from these levels during the day, and try to give yourself the confidence. You understand this, guys? Yes? Extremely effective, extremely effective, extremely effective, extremely effective. All I have to say is extremely effective. Trust me, extremely effective. Can you see this? Extremely effective. Extremely effective. Rejected here, right here. Extremely effective. Extremely effective. Extremely effective. Rejected here, S1. Holds above S1, pivot. Hold, rejected, pivot, S1. If extremely effective. Yes? Do we say yes? Okay, guys, let's consider this. Okay. Finally, I'm going to show you again how to mark the pivotal levels on the charts as been requested by one of the student. These are your charts. Go to indicators, write pivots here. You have pivot point standard, right? Click on this. It will give you pivotal levels like this. Go back to their properties, guys. Select the daily here, not the weekly, monthly or yearly. Daily levels, weekly, monthly, yearly are not effective. They are 30% effective based on the statistics we had established in my bank. But the daily is nearly 85% effective, guys. Again, daily, right? Number of pivots back 15 is fine. You want to increase more, you can do this. It's entirely up to you, but leave it as it is. Type will be traditional, guys, only. Style, you can select any color you like. Thick the lines as you like. And then mark like this. See this, right? Guys, you want to remove this historical pivots of the previous days. Go back in format, inputs, show historical pivots here, click on them, it's deleted. You have the clarity, you know, these are the pivots of the day you are trading. Yes, everybody understands, say yes. And guys, using this method, by focusing on 3 pairs alone, you can still make 150 pips a day. I can tell you this, extremely easy, 150 pips a day. So when my best of trading is not using this method, guys, I've got another advanced method, but my best is 3,000, nearly 600 pips in one session. I was trading a 200 grand account. I had nearly 25 trades open at a time. I had 6 computers and I had 3 people working with me, and I was flipping few accounts. You understand, guys? But that was my best. My drawdown during that session was not more than 25% of my portfolio. I will discuss this at a later stage. So guys, you need to stick to what I've taught today and practice on the charts, gain yourself the confidence, and I will have a question answer session in few days, the day I will announce in the Telegram channel. So please confirm if you guys understand what I've said. Okay guys, just give me a second. So thank you very much for attending my webinar today. I hope it gives you a new understanding of the markets, intraday markets. It gives you the new confidence in the intraday markets, and it will eventually make you a profitable trader. I can tell you this. Thank you.